Ladies and gentlemen of the crypto space, we're live on a Wednesday, February 2nd at 12:32 p.m. Today's episode is Bearishness is Bullish, the Time Horizon Burden. This is really an episode that's going to take a lot of spend a lot of time thinking about smaller portfolios versus larger portfolios and focus on burden, responsibility, the necessity to do work to achieve a particular outcome. There's extreme burden with short time horizons. There's extreme burden with smaller portfolios. Obviously, time horizon is something is not necessarily in your control. You don't know when trends are going to directionally change from bearish to bullish, so on and so forth. And also, a smaller size portfolio is not in your control. But the reality is, shorter time frames, shorter time horizons to interact with markets at such a scale is a burden. Smaller portfolios is a burden. It's not anyone's fault, it's just a reality. And a burden entails additional work, more work, extra work. Painful work is needed in order to achieve goals. Obviously, with smaller portfolios, you need to potentially consider shorter time horizons and ride trends from support to resistance or short from resistance to support, and you're able to grow capital. And as the portfolio grows, you're able to take on a different perspective on the markets and engage in longer time horizons. At 250% annual appreciation for Bitcoin over the last 10 years, if you have a relatively large portfolio and are interested in a 20-30 time horizon and a 2, 3, 4, 10x on the portfolio, you have literally nothing to do and you get to sit back and just relax and wait for the next 8 years to play out. But there is no such luxury for a smaller portfolio, because if you're putting in $100 waiting 10 years to turn it into $1,000, it doesn't sound like the most rational course of action and the most rational way to spend time. That time can be better spent pursuing education, skill sets, and means of acquiring additional capital that would facilitate the luxury of the longer time horizon perspective, the luxuries associated with the larger portfolio where you don't need 1,000x on the money, where a 10x, dare I say a 5x on the money, is extraordinary returns. Someone with $10 million achieving a 5x by 2030, you can sit back a little comfortable. And obviously, there's a lot of folks nowadays in the crypto space. We look at accounts every now and then, and we talk about accounts on the Discord forum. Folks run around with nine figures, $1 billion. Yeah, they sure as hell don't really need the multiples. They don't need it at all, and which I find interesting, because there's a great deal of rationality in a lot of the bigger market actors, but they still expose them to the enterprise of the crypto space, which is going to have the increased volatility, but it's also going to have that volatility to the upside. You get way more than 10x over the next 10 years on assets that are going to benefit from the inflow of capital into the DAE, as Dan Tapiaro and Dan Moorhead talk about quite often, as well as Raul and folks. If you're going to go from a $3 trillion ecosystem to a $30 trillion ecosystem, you better believe the enterprise implementations, the tech plays, are going to be way more than a 10x. That's where you get the 100x, the 1000x, the 10,000x returns on capital. But you're also going to have extreme short-term volatility, and you don't have the history of the asset, the price action, the entrenchment, the moats, to say that there's a directional appreciation. You don't have the establishment, the roots of a Bitcoin that say 250% returns per year over the last 10 years. Most of the stuff in the DeFi space is 2 years old, give or take, or at least released within the last 2 years. And there's few projects that date back pre 2019. Aave has roots before 2019. Earlier 2019 was it Lend, and then Bancor has roots in 2017, and MakerDAO. And that's about it. And obviously the stable coins, those have a greater history than the start of our DeFi experience in late 2019, early 2020. But without that history, you don't you're taking on an increased risk profile because you don't know who the developers are, if there's any scandals that can emerge with the protocol. This is straight up enterprise. This is straight up VC. You're providing venture capital to enterprise, and as long as they fulfill their mandate, they act on and achieve their company objectives. You can expect the volatility to the upside over time to be significantly more than what could be expected from a Bitcoin or probably even an Ethereum at this point. The expectation overwhelmingly is that there will be protocols on Ethereum that actually are more valuable, at least from probably from a market cap standpoint, than Ethereum itself. And that is the real threshold of success of Ethereum. When the protocols on the ecosystem are more valuable than the ecosystem asset itself. And I firmly believe that is an inevitability. That's just a matter of time and a matter of capital inflow and expansion of the DAE. In the coming years, once we breach our previous highs, 3 trillion, 4, 5, 6, 7, 10, 15, 20, 30, then you just have momentum. And then you start to build that history. Then you start to build that entrenchment. So we don't have the best charts for DeFi 1.0 protocols. Aave has had a sketchy price action chart. Bancor has had a sketchy price action chart. Maker's chart is a downright tragedy, and that's just the nature of the complexity of trying to understand these markets and trying to deploy capital in a well-constructed portfolio that attaches to the strongest narratives. And the strongest narratives you expect to play out a certain way over time. The strongest narratives, you have to define a time horizon. You have to assess whether the narrative is still valid. You reallocate if the narrative is invalidated or disrupted. And adjusting doesn't necessarily or invalidate. You don't have to have firm lines, like hard lines in the sand. But you could adjust the portfolio based on risk profile, based on uncertainties, based on potential invalidation of a narrative, but not necessarily confirmed invalidation of a narrative. Like a big thing that I'm considering nowadays, most recently, is the scale and scope, the potential of the stablecoin Cambrian explosion. I expect there to be so many more stablecoins, and then Darwin. Survival of the fittest comes into the picture, and that'll happen for the broad crypto ecosystem. But that's besides the point. But because of the expansion of the way I see stablecoins evolving, it's certainly impacting the way I would deploy capital to any particular stablecoin protocol. You really have to be increasingly selective, which has more momentum, which has more directional price action, appreciative directionality, which has more TVL, which has more famous developers, which has a moat that even if there's price action depreciation or a temporary disruption of the narrative, they have a technology that that has reached critical mass that is something that no one else has. Perfect example of that is Ren. Price action has been horrible. It was up at $1.70. It held at $1 for a while, but now it's getting hit pretty hard, relatively speaking. But their technology that they have is a moat. They have a decentralized, disintermediated network of computers that could do multiple tasks. And that's an interesting moat. And that in no way, shape, or form does that mean I expect the price action to turn around, but that is a moat. They have the partnerships, they have the credibility, they have the developers, and directionally, technically, they're still bullish. Let's take a look at the chart real quick. Pop it over to the main screen. I got any swap up. Let's take a look at Ren. I think I only have dailies and Dex Screener, but we'll see. I might have weeklies. Let's go out to the weekly. Yeah. Oh, I don't have enough history. I want you need 2019 history. Ren is the take maybe. Surely not going to be there. I don't know if we get the history we want. Let's take it out to the weekly. I mean, that's better. Here, let's go even further. Let's take a look at directionality. Okay. So what you have is extraordinary volatility, but surely you got serious directionality. If you want perspective here, price range. Back in 2019, you were up at 10x. So 10x in 2 years. Come on. That beats the pants off what Bitcoin's probably going to do over the next 5 years. Bitcoin goes to a million, that's a 20x. But uh, in 5 years, what do you think? Something that went 10x in the last 2 years, you think is going to be stuck at 1,000%? So the potential for these enterprises is significantly greater than that of the base assets that are very suitable for many actors, but are not expected to have the same degree of appreciation. These are enterprise, these are businesses, and if you're deploying capital to these, you really need to think about them from a VC standpoint. Not so easy. We're going to talk a little bit about comments. I think that hit a good portion of what I wanted to talk about from a narrative perspective. This is a period of bearishness, a period of horizontal price action. I talk a bit of macro on Twitter, and we keep an eye on currency. Obviously, if you have a currency breakout, that could have strong implications for collateral requirements, where folks want to liquidate collateral to meet they're meeting dollar demand. They're buying dollars. So if you have a big breakout on the dollar, um, anything starts to get liquidated to buy those dollars, and that indicates probably a debt issue where they need to service their debt obligations, so they're selling anything they can. Let's take a look at the 10-year, right down the middle of the bond spectrum. You guys know what I think about this. If we have a breakout above the 50 SMA, the 100 SMA, and push towards the 200 SMA on the monthly, that's a very interesting trend. Luke Groman talks highly about things that I very much agree with. A risk off would be seen where people are buying bonds. The entire bond curve is distorted, so it's not as meaningful as it was historically. We could clearly extract a great deal of information understanding why things are distorted, but where things are heading, we don't have the historical precedents. But certain things, the classical things, are still applicable. You see a sharp decrease in yields, and that they're treating the bond as a safe haven. Oh, the incredible safe haven. But bonds are selling because the yield is negative. It's negative real yield, and they're not as meaningful to a portfolio as they historically were. And it could also mean the collateral liquidation to do other things, to purchase dollars, to purchase enterprise, to support uh, a corporation or an entire sovereign economy. A variety of things at play here. But the burden here on the Fed is if bonds aren't being purchased, someone needs to purchase them because they need to issue debt. And if people and countries aren't purchasing it, they need to step in with QE and start buying this shit off the market such that it doesn't fall into a dangerous historical trend territory, which would destabilize the markets by inducing fear. And there goes the balance sheet. So if they start QE, balance sheet goes up. There you go with the risk asset. So if you start to see this break upward and you see hints or any rhetoric of them restarting QE, risk assets are going to go absolutely parabolic, which is exactly what they did over the last 2 years. Now, what's interesting is I don't think they're going to be able to raise rates much. And, 0, 1, 2%, 3%, it's not going to do much. I think there's too much weight put on interest rates, especially the Fed funds rate, with regard to its effect on markets. What's more important is assessing directionality of these yields on the spectrum. 10 years a good midline. It gives you a good sense of pressure on sale versus purchasing of bonds and currency. And that really shows you large macro capital flow between collateral and dollars. Obviously, you could get very surgical with the macro financial system and look at the other fiat as well, but the vast majority of the system is dollar denominated. So that's the best way to get a very high scale perspective on the entire network of cash as it flows through the system. And it's really two charts. So I'm a reductionist. I like to break things down as simple as possible. Like I got two charts up, and it does give you a real high level picture of capital flow through the entire global economy. And that's basically the DXY and US 10-year yields. You can obviously get surgical and look at various currencies specifically, whereas the DXY is an index of dollars versus predominantly euros. But euros is a big deal. You know, Chinese currency is a big deal. So, my perspective and the way I've reduced things to give me a simple glimpse of the markets doesn't give the most clear perspective, but the point is to give me the quickest perspective on the state of the global system. Risky cryptos in the house. Crypto bets. Hey, Captain. Grumpier Miner. Hit that like button. 57 people in the stream. 14 likes. We can do better. Killis is in the house. Adrian, good evening. Crypto bets. Are you using MIM as your stablecoin of choice? And where are you earning yield? I am not using MIM as my stablecoin of choice currently. I have 16.38% of capital deployed on Phantom in Yearn Vault, DAI USDC. It's using Scream Finance and farm dumping that. And, it pays out modest. But that's extraordinary percent. I have like 830, earning about 12.5% on average, let's say. And that's pretty cool. Frankly, I don't want to be greedy mode. If I got that and that's cranking out for 12%, that's it's over 100 grand a year. I don't need to be greedy right about now because I got plenty of other assets in the portfolio that generate a significantly higher rate of return and have directional exposure to volatile asset price action. So I don't need to deploy. And I want to be protective. I don't have the largest portfolio. Obviously, it's large relative to a smaller portfolios, but it's small relative to the big portfolios that are out there. So many folks are running around with 8 figures and even 9 figures nowadays. It's quite impressive to say the least. Just the amount of stable coins that are just sitting on the side. I tweeted about this earlier. The capital isn't leaving the crypto space. Where the hell is it going to go? Are you going to deploy to the ridiculous state of equity markets? Not you, but the big boys, hedge funds, VCs, or people with $1 billion. Where the hell are you going to deploy? You park that shit in stables, earning 2, 3, 4, 5%. Oh, dare you take a little risk on and you get 10, 15% on a $500 million. I mean, how much is in here? It's cut off. Let's take a look. There's $180 million earning 15% on the money. And it will be in stable coins because the assets are sold. So if you take $50 million, oh my God, 15%. Oh, dare you dilute the pool down to 10% APY. Oh my God, on $50 million, the money's not going to leave the crypto space. The money is going to be sticky. It's going to stay here, dollar denominated in stable coins. And as the macroclimate sorts itself out, maybe we have a bond risk off where bonds are dumped, yields go up, Fed jumps in because they got to buy it, someone has to buy the debt, QE restarts, balance sheet run up starts occurring again, and there you go with the equities markets and the stable coins are going to be liquidated and risk on across the crypto space. And you guys know that experience because we had it for frankly 2 years. Let's keep it going. Barry DGB is in the house. Hi, Noah. Always happy to see you. It's a pleasure, my friend. Liv W. Noah, how are you feeling today? I'm okay. A little hungry. I got to work on that. Daniel, hey, Cap, you looking prime today. Have you been hitting the gym? No. I keep busy, though. Somehow I keep my physique in decent shape, I guess. Sup, Posh? Captain, I read on Discord that he rotated your curve to CVX. You think CVX has better upside? It's a subjective opinion. I think the entire sequence is going to be directionally bullish over the coming years, and this is a perfect chart of directional bullishness over a quite a palatable hot time horizon. You guys know the way I've looked at the curve chart on the monthly. Clearly, it's really directionally bullish. Like people are getting hammered because they have too short a time horizon and they get hammered hard because you'll take a 60% loss on your money. But then again, if you had a longer time horizon, you're up multiples on your money. You're up 895% since October 2020. So directional bullishness is basically very confirmed in this chart, especially the fact that we're above the TWAP on the monthly. There's no indication technically of a trend or directionality, and no indication of directionality change. There's no indication of narrative invalidation. In fact, convex is confirmation, and then all the protocols consuming convex is just excessive confirmation of the curve narrative. I expect curve to be directionally appreciative based on technicals and based on narrative. The reason I don't have curve is for a variety of reasons. I used to have a good amount of it, the whole Nkumer ideology, but the reality is curve, convex, and a variety of other assets are all part of that sequence of events, those chains of protocols that are all on the curve narrative. What do you think is going to appreciate more? It could be curve or it could be convex, CVX. We don't know. We'll know in hindsight in a year or two. We'll have a good sense of what's outperforming. Do I expect curve to outperform? Yes. Do I expect it to significantly outperform? No. There is a significant amount of supply increase over time. There's a reason why it doesn't depreciate considering the amount of supply increase, because there's such a powerful purpose of it as a asset that dictates where the increasing supply is directed. And that's basically an MMT money machine as I've defined it, and that's powerful. But because of the increase in supply, I don't expect it to significantly outperform as compared to a variety of other assets. I expect the upside to be volatile, just as the downside is volatile, but I expect upside volatility to not be 1,000%. It's not going 100x on the money. You're not going to turn $1,000 into $1,000,000 on curve in probably the next 2, 3, 4 years, in my opinion. I don't think you're going to get that kind of returns, and that's my sentiment. I expect upside volatility to be muted as compared to other assets. I could do the same type of deep dive on convex, but as you can see, that was my choice. It was a subjective choice. I think I like the way Tetranode talks about convex and bribes having unlimited upside with regard to revenue stream, and convex has a limited supply in many regards based on how much curve it acquires. So I like all the protocols that are vying to purchase large quantities, like $100 million on the table. The protocols are talking about purchasing worth of convex. This is all meaningful, so that was my choice. It's a smaller position. My convex position is a smaller position that historically my curve positions were. So I've diversified in some regards. I've taken some risk off. Obviously, I have a fair amount of stablecoins at this point in time. And I have my largest position, which is multi. And that is an entire narrative unto itself that does play into the curve narrative because it ties into liquidity, and it's really along the lines of my primary 2022 narrative of seamless cross-chain interoperability. The notion that you're not going to necessarily need to know what chain you're operating on. I mean, you got Varen that's hidden on RenVM. You got Multi, which they've literally said cross-chain transactions. You got Solidly, and which is an innovative DEX that I think will offer more of service functionality or API functionality in a sense to other protocols. So other protocols will be able to consume it. And we know the Andre crossover between Multi and Keeper and Solidly and all his incredible work. So if you tie in AnySwap's conversations on social media about cross-chain swaps and VE33 and the mention of Andre with VE multi and solidly being V33 and the potential to deploy liquidity to solidly and capitalize, I would speculate, capitalize on cross-chain liquidity. Or facilitating cross-chain liquidity, and extract a revenue stream from it using VE or historic VE tokenomics, the revenue share model. So we have a lot of tidbits. We have a lot of suggestion. I would say a lot of foreshadow. I would say a lot of indications and hints and tantalizing tidbits and all that fancy shit that point us in a particular direction. What do we know? We know the DAE, thanks, Dan, is going to expand over the following years. So I talk in time horizons of years. So if all these trillions of dollars are going to flow into the space, what am I most interested in? What narrative am I most interested in? I'm interested in liquidity, but as 2022 unfolds, I'm interested in the capacity for liquidity to flow cross chain to build a bigger ecosystem. It's not just Ethereum, it's every chain. And that's extraordinary. And all these chains, other than Ethereum, offer features and functionality that nuance themselves. They make themselves unique. They offer things that Ethereum doesn't, like first and foremost, cheaper gas fees. And that's great. I want to keep my assets on Ethereum, but I want to do a transaction on Phantom seamlessly. One transaction, no complexity, input Ethereum on Ethereum, output Phantom on Ethereum, but the transaction executed on Phantom. That's where we're heading in 2022. Seamless cross-chain transactions and interoperability. And I find that absolutely extraordinary. It's inevitable. That's an inevitability. So the question is, when you're allocating capital, how do you attach that particular narrative? And then it's just a matter of time horizon, waiting for that narrative to unfold. And also patience dealing with the macroeconomic shit show that these federal persons have created. One curious view, speaking on Aave's new EMO V3, stablecoin borrowing at 90% LTV. I'm very excited for V3. Very, very, very. Everything they talk about V3, as well as their cross-chain deployments, is massive. The narrative for Aave is massive because it spans into legacy finance banking infrastructure. The problem is their tokenomics suck from a capital allocation standpoint. Right now, I would argue, based on their price action, the trends, the directionality of the market, and the tokenomics, it's not an investable asset. And that's so goddamn disappointing. Horribly disappointing, considering how profound their software is. Such a contradiction in so many regards. And the same thing in many regards with Bancor. Bancor is an old school DeFi 1.0 protocol, dates back to 2017. Their new V3 is like jaw-droppingly impressive with regard to its technical implementation, the tech specs that they've relayed to us. But the price action history is very scary, to say the least. You want to see an uptrend over time, low, higher low, if this holds as a higher low. I don't give a shit if it takes 2 years to print 3 lows. Look what's happened with Bitcoin. It's all higher lows. Everything with Bitcoin is higher lows. I mean, look, in many regards, look at the curve chart. Curve looks like Bitcoin in some regards on the monthly. I wouldn't. You need a different chart. BTC USDT. BTC. Uh, BTC USD. Let's go back to Coinbase. They have a longer history. So there's some serious higher lows. And that's just 2015. So obviously, if you go further back, calculated. Nope, that's even worse. Where the hell is the long history? Bitcoin all-time history index. Well, clearly that's higher lows, period. I mean, this is really staggering when you look at it on a log chart. It's just only higher lows. I mean, if you that's an extraordinary chart. So there's time horizons that are really screw you with your brain. And this is what we want to see start to emerge with DeFi time horizon, higher lows. And that gives us the directionality of their particular market segment. And we want to attach to that appreciating directionality over time. Believe me, if you bought Bitcoin at $3,000, you don't give a shit if it dropped from $60,000 to $30,000, especially when you're looking at it from a multi-year time horizon. Tapsy, evening, my guy. Always a pleasure. Andrew, Mr. Stream. Good thing it's recorded. Yes, indeed it is. Raul, hello. Good morning, Noah, Andrew. Rational Gang is in the house, the most rational community in the crypto space. What is the mom bookmark folder, Noah? Oh, that's my mother. Information about mom. CVX, sir. CVX is, I've talked about it thus far. What do you do with your native BTC rewards from your Ren Dark nodes? They just sit there. Hey, Captain, appreciate you and rationality as always. Have you watched any recent Felix? I have not. Uh, there's so many brilliant minds, and I speak to a lot of persons that I hold in high esteem that I listen to whenever they get a chance to speak. Buenas tardes, señor Henry Towers. ¿Cómo está? ¿Todo bien aquí? Yo espero mucho de todo, de todo estamos mirando. I don't know, algo así. I don't speak perfect Spanish. Have you looked into Key DAO? I have not. Not interested. I don't need to extend out on the risk curve right now, and I don't have any room in the portfolio. I have looked into a little bit of Angle. That does look interesting. And I deployed like 0.01%, a fraction of a fraction of a percent to this. It has a VE component, but it literally just launched like last month, so it's maximum risk type stuff. Appreciate your insights to explore your way of thinking. Seems you are bringing some valuable experience to this young, volatile space, and I appreciate it. Excited to keep learning more. You're very welcome, Sam. We can do better. Charlie's in the house. How are you, my friend? It's always a pleasure. 59 watching. Hit those likes. 30 people. We can do better. Raul, do you think VE Multi will come first on ETH and later on other chains? The odds are it'll probably come on all chains. With DPX, our DPX dropping from all-time high, is there any price at which it becomes interesting to you? It does not. Captain, do you ruminate on mistakes of past? Always. Like selling too early, I didn't buy or buy enough. I think about it all the time. Fortunately, my larger allocations historically did play out well. I take losses all over the place, and I've learned to not regret them. Like I liquidated a position the other day, and I took a $21,000 slippage. I need to liquidate the position. It's not something I want exposure to currently, and that's what I did. So I think about all these things a lot. And what you want to do is to be directionally appreciative over time, considering depreciative aspects to the portfolio, depreciative events in the portfolio. What's your take on Trader Joe's new tokenomics, SJO for stables? Not on my radar currently. What is your stables compared to your larger crypto portfolio? 18 and change percent, I think I said. 16.33%. That's where we're at with stables currently. Do you know I thought most of your curve was locked? How do you sell it? Most of my curve was CVX CRV. I still have a 3.76 VE CRV position that will be locked in perpetuity, and I will just continue to increase that block over time. Late, but I'm here. Good stuff. Mark's in the house. Quantified. Hey, Cap. When you think of potential outperformance of multi the coming years, what multiples are you eyeing? Unknown. More than others. I think the scale is, literally, where are we with market cap? I expect a significant change of top 10 over the coming years. I expect a multiple, an additional zero, to be on the top 10 in the coming years. There's no reason smaller protocols, not top 10, can't start running around in a $100 billion region. So if you're at a $500 million for multi, there's no reason you can't get 50x on the money in the coming years. That seems just reasonable just from a market cap standpoint and where market caps are likely heading. You got $1 trillion companies. Was it Apple at $3 trillion? Seriously. Live W, yeah, that's an absolute tragedy that PayPal apart. Fuck stocks. That shit's crazy. I don't know. People buy that non-cash flow bullshit. Who buys something that doesn't pay you anything? What a waste. What a waste, the entire stock market. Absolutely disturbing. Apologies if you cover this, but the sell-off in your CVX position to buy back at a greater amount. Why did you events happen so quickly? Because I'm human and I have no godlike capacity above you guys. buy something, sell something. Oh, flip flop, change of opinion, something changed, and the whole goal that you need to find is comfort. And right now, I'm comfortable with the portfolio. I don't even have a temptation to trim positions. I currently am very comfortable. Like, I don't have an expectation to necessarily do any transactions today. I don't have any strong feelings to deploy stables. I'm looking at charts. I'm relaxing. I'm going to do some work for my company. And that's the state I found myself in. But you have to act on emotions. But if your emotions are telling you to buy, sell, buy, sell, buy, sell, that's not a stable way of interacting with markets. You're going to drive yourself nuts. So there's nothing wrong with flip flopping. There's nothing wrong with changing a narrative. What is necessary is remaining rational and finding a place of comfort with a position over a decent time horizon. Can you please give more insight into Angle? I don't have much more insight. It's relatively new, but it has a VE component and it deals with stablecoins. That's very interesting, obviously along the lines of my core narratives and interest in 2022. Which position was that where you took a 21% slippage on my spell liquidation? I still retain a spell position at 5.98% of the portfolio, which is the culmination of my OTC deal. It's a relatively sizable position. It is not liquidatable, and it's okay. I'm hopeful that the price action and the entire market for the asset stabilizes. Obviously, it's a very toxic situation. The narrative, at least on social media, is shattered, and that's disappointing because that's going to significantly disrupt momentum. But what do we know from a technical standpoint? There's two things that catch my eye that are not overwhelming that warrants an increased position, which is why I liquidated with that slippage, which I'm describing at this moment. If this loads, oh, I'm on Phantom. Let's go. No, I'm not. I'm on Ethereum. Why is this not loading? Here we go. Nope. Oh, no. Come on. MIM. So balance is stabilizing, peg is spot on. So folks, this goes into like the new stuff I'm thinking about stablecoins and pool balance versus a stablecoin peg. You would have to get to like 40 mil, 30 mil for like really the peg to start to slip, especially with the way Curve is implemented. Now, Curve is just an extraordinary entrenched functionality. It's so powerful, it's hard to describe in a sentence. Its capacity to keep peg of stablecoins is extraordinary, even with 90 something percent pool imbalance. So, but the fact that the pool is directionally rebalancing is encouraging. Another thing that has always caught my eye is if you go over to multi-chain and you go over to the pool and you go down to MIM, MIM has unlimited cross-chain liquidity, meaning you could mint whatever, you could transfer whatever you want to any of the chains. That is an extraordinary position of power. Few have that. If you go down to, where's Frax? And on the Frax, it has some of that. It has three unlimited implementations. The odds are this is from a contract standpoint, where multi-chain was able to integrate directly into the MIM contract, either the core MIM contract or some sort of external proxy means of interacting with the core MIM contract to mint as required. And this is a cross-chain mint, so what happens is multi-chain takes the MIM into custody, and a representation is placed on another chain. So obviously, the cross-chain capital flow doesn't impact circulating supply. That's pretty obvious, but this is quite interesting. There's very few other things that have this unlimited nomenclature displayed, which I think is quite meaningful. And MIM really hit it hard. It's everything. So we'll see what happens. What I know is that the story that's circulating on social media warranted reduced exposure, and I'm actually quite content with the OTC deal. Uh, Having my position locked, which forces me to maintain a position even though I have a sense of discomfort, because there are these technical indicators that suggest restabilization of the directionality of their development efforts. Um, I don't not expect further depreciation. The narrative on social media is completely fractured, and there's no reason this can't just keep going down. But in any case, I have forced exposure, and you guys know me. You guys know me. I love that forced exposure shit. I'm a 4-year lock kind of guy. I'm a long-term lock kind of guy, so I appreciate that, and maybe that's a good thing. Anyway, I hope that helps. Um, the Frax proposal to acquire 25 mil in CVX just passed. Well, that's very nice. I expect this convex to stay within this fork. That'd be nice. It's broke down below, but it's riding just along the bottom bar. And if it could break above the 100 SMA or the 200 SMA in the daily, especially with a 25 mil buy, that seems like something to smile about. We got a MACD possible bullish signal cross. It looks like we pushed above the signal on the RSI on the daily, and we're coming back down for hopefully a bounce on the signal as support. Looks like we never broke the 200 EMA, the 200 SMA in the daily, and these are all technical indications of directional bullishness. And if you zoom out, you really get a picture of where we are, especially with the fork. So we did the entire range of the fork. This is an extraordinarily volatile asset, but we have big market actors coming in with large amounts of capital, which should get this shit off the floor, and there's clearly a floor here at this point, and back into hopefully an appreciative trend direction to navigate the bars of this depicted fork. Why multi over synapse? For one particular reason. I'll show you guys. For one particular reason, $7 billion in TVL. I don't know why it's not there. And transactions, 2 million transactions with $22 million of transaction fees that have yet to be distributed to VE multi holders. $55 billion in total volume. Yeah, multi is the market leader, and market leaders tend to remain market leaders. Bear in mind, Lyft is a good company. So, if anything, Synapse is Lyft to multi-chains Uber. Probably the best way to think about it. Have you looked into Icky? I have not. Dan, your notion of not chasing what lots of retail chase after is a big factor in keeping me hesitant and going after looks. If everyone's chasing it, I wouldn't waste my damn time. Yeah, I've seen a lot of attention paid there. A lot of folks I talk with and have are in it and have looked into it, and there's a lot of farm dumping going on. It's just not something I want exposure to. I want exposure to shit that I don't have to think about much. I want the easier stuff. That's the deal. Thoughts on node projects? Strong, Thor, Power. Not interested in any of them. I have my old school Ren VMs. Danny has too much weight on his shoulders. I feel bad. I have much empathy for his experience. It must be quite uncomfortable. I'd happily talk with him and help him the best I can, but it is a fractured narrative circulating in social media, and that is an extreme burden and very frustrating. But you got to remember, Danny has two other partners on Abracadabra, and that's Squirrel and Merlin. They have shown a great degree of technical competence and professionalism thus far, which is overwhelmingly reassuring. And all this, I feel, all this Wonderland shit show, I probably feel most bad for Squirrel and Merlin because all they've been doing is killing it with regard to software and management and deployment, so on and so forth. And obviously, my empathy goes out to all of them. And I truly hope that things stabilize and, you know, uh, they've put in a lot of work, and work requires requires acknowledgement. They built what they built, and they've achieved these billions of dollars of liquidity and cross chain capabilities and CDP leverage and CDP backed stablecoin, which is basically a crypto implementation of the euro dollar. Some serious shit these boys built. So to no discredit whatsoever with regard to what they built. Hilda's in the house. How are you? How are you? Dan, I have Keeper on Fixed Forex. That's unlocking today. How do I get it off? Can't seem to figure it out. You go over to Fixed Forex. You press Continue. You go to Vest. This is a good question. I've never even thought about taking it out. Here, that's how you claim. Oh, how do you have it expiring? Yeah, claim. When it claims, no, that's your claim. Maybe you get it as a claim. I don't know. I'll know when my Fix 4X expires, because as of right now, I got about 4 years left, and I just plan on keeping it perpetually locked. What's going on, my guy, Captain? How are you doing? Question: Multichain uses a router. What's the difference between that and a bridge? I don't know. You got to look up. Was it Blockmates? Who wrote the article? He's quite a student, quite a good follow on Twitter. Blockmates. Oh my God, what's his Twitter handle? Uh, oh my God, what's his Twitter handle? I'm gonna scroll for it and get it for you guys because he wrote a great article. Here, Blockmates, Blockmates. So Blockmates. Here, I'll put it in the channel. Here. He wrote a great article writing up multi. Is multi still at a good entry price? That's not something I could tell you. No idea about next phase of CVX FXX rollout. No, I do not. Ladies and gentlemen of the crypto space, Wednesday, February 2nd, 1:18 p.m. As always, I thank everyone for joining me. I hit a little bit of macro today. I hit a fair amount of the crypto space. It's really about zoom out. It's really all about understanding short duration is really a mind fuck. And you want to attach yourself to long duration narratives that are unfolding in higher lows over monthly time horizons or multi-month time horizons, and you're going to expect significant volatility, 30, 40, 50, 60%. But as long as directionality is maintained, that's what you want. That's all that matters, because over the next years, when 3 trillion goes to 30 trillion on total market cap of the crypto space, the stuff that's directionally appreciating and growing and is entrenched deeply in the DeFi ecosystem is going to significantly outperform all of traditional finance and probably a good part of the crypto space also. Thank you all for joining. Tell everyone to subscribe. After party on Discord. I'm going to pop the link in the description. You'll see it in my Twitter profile as always, but I wish you all a wonderful day. I will see you again Friday.